Hello and welcome. Today is a review of November 6th trading day. And so this was a Monday after the previous week where we had pretty unusual bullish strength, significant gaps up, and strong bull trend days. And this Monday, to I think a lot of people's disappointment was, I mean myself as well, was nothing but tight range choppiness. And with the algos and liquidity and these structures here, I was able to pinpoint entries that were strong enough so that every trade had a pretty decent amount of direction with it from the point that I entered to a few minutes later. I think primarily the management of the trade is what affected me today on November 6th, and the day I'm recording this, which is November 7th, I ran into what I believe to be a similar issue where I'm setting the trade to break even rather than protecting, or rather than taking partial profits at 1R, and then I am moving the stop, trying not to get my break even hit because I didn't take any partial profits, and tightening the stops again and again, even if there's no real continuation on my trade, and I'm just getting stopped out to the tick prematurely on those mini pullbacks, and I get punished for it, of course. So with a trade like these, with trades like today, where I learn to better identify the context of the chart, I need to be more steadfast and cognizant of the context. And here it's clearly lots of wicks, big up, big down, big up, big down. So it's very choppy, and when you get those big up moves, it's very likely going to be sold. And that's sort of the issue I ran in here today, as well as November 7th. So this first trade, I've been talking a lot in these videos about finding my voice, finding my intuition, and a system that is very objective and clear and clean and almost just simple and binary and straightforward. And I'm doing that. I really feel like I have honed in a lot more on the algos and the structures, and where is the liquidity, how is it grabbing the liquidity, in what way is it grabbing the liquidity, right? Is a microstructure necessary, things like this. And I do find that this is my technical trading, which has been an issue since I really started this video series, has improved. Just from a process oriented standpoint, my technical entries and the analysis of where the chart is going to go in the next 2 minutes, in the next 3 minutes, in the next 5 minutes, it has improved. Or who generally has the strength, the probabilities on their side. So that's something to take a step back and pat myself on the back for, because it really was something I dedicated quite a lot of time to. I think what's struggling now is simply the execution, and by execution I mean profit taking, which I guess I don't like to do all that much these days. So this first trade, right, head, shoulder, left shoulder, liquidity here, tapered channel, orange on the breakout, beautiful. Long IHS tapered channel, break liquidity on left shoulder, strong 5 minute, yes, we had a strong 5 minute close, massive volume. I set the trade to break even, and then it came right back rather than taking profits here at 1R. And I noticed this yellow channel on Eric's chart, but not on mine. And I think by the time I noticed it, it was already kind of too late, and I was like, oh, just take the break even, when Eric would be protecting here. And this is something where it's like, hey, look how ridiculous this day is. Look how strong these sell-offs are. What are you doing? Just take the profits. And yeah. Trade number 2, luckily I had learned my lesson a little bit. However, I was more cautious. I saw this chop here, this big up, big down. So I didn't want to be buying here, even though head, left shoulder, right shoulder, bigger microstructure here on the break of red, of orange, breaking out of yellow. So I waited until we had a strong close above and a complete breakout of this yellow, rather than enter here, which is probably what I normally would have done. I guess I had assessed the context here as me needing more confirmation and this potentially being a controlled buying red. So long IHS with IHS microstructure was quick to protect given the extremely choppy tight range. Also took a more conservative entry by noting by noting what by noting buyers in the tighter chop which was forming the IHS. It wasn't until we had a strong close above the tight microstructure IHS chop that I had the confidence to enter on the break of the tapered white channel. And by white channel I mean yellow channel. My apologies. With the liquidity up above that it grabbed. What a nasty tight range day. And yes, this is what I was gunning for. I think that's a fine trade, and I was also more of the mindset of, look, if the market's going to give me 10, 12, 13 ticks, I'm going to take 10, 12, 13 ticks, and I did so. And now, here's the thing with these two trades, and the final trade of the day, is that I had done a very good job of planning ahead. Over the weekend, I had made a pretty extensive flow chart, more so for a mental check-in than anything where I'm actually using it to prepare just before the trade. It's more of a, all right, what's going through my head? What am I looking for? What have I done to prepare for this trade? Have I even prepared for this trade? Is this a patient trade? What would Eric say if he saw this trade? Where is my... It's things like that, right? And I found that to be very helpful, just to have that tap on the shoulder, someone to check in with me during the trading day. And before each one of my trades, that's very important. And I did a good job of executing that on my previous trades. However, this trade was where I lost that ability and I lost that prudence and dedication to actually continue with that. I don't think I even read the flow chart here, and you can tell my entry was right about here. And funnily enough, this is exactly where Eric took the entry. Sorry about that. So this entry here, I mean, you can just look. It is chasing this big bar, as opposed to waiting for, say, a nice pullback here where we come down and then we come up and then we form that head here and then we break this tapered channel, right? That's what we call like a second entry, right? When it retraces like that and forms a lower high right here, right? Head and shoulder, so lower high like that. And this was something where I also, was gunning for this liquidity here. I wanted to see that. I saw the rejection of this green channel, but it was merely a look. I want to see this specific set of requirements that I hadn't planned for ahead of time. I wanted to see, I should have been go there and said, all right, I want to see this blue break with that right shoulder forming that lower high, grabbing this liquidity right here. I want to see the stronger rejection here, right, of this green channel right there, grabbing this liquidity, blah, blah, blah. But I didn't do that on this trade, and that was where I messed up, because not only did I just enter here saying to myself, oh, getting seduced by the big red candles, chasing it down, wanting to see this flush down to low of day. It was also a matter of, I had my stop here, and had I had my stop here, I would have been saved on the trade. This would have broke down to low of day and never triggered my stop, and my original stop had to be here. However, the trade was just bad and unprepared for and not planned for and unintelligent, that I kept saying, oh, I'm just going to move it tighter and tighter and tighter and tighter, and then just not take a big loss because it's such a bad trade anyways. And then I get stopped out. And then the trade reverses because I don't respect my original stop. And it falls along those same lines of, you're already entering the trade in a bad mind state, and you're managing it also in a bad mind state. So it's continuing that sort of self-sabotage, that negative approach. And how do I fix this? Well, the answer is simple, is by planning ahead planning ahead, as I said here, I want to see this tapered algo break, grabbing this liquidity here, head, lower, high, right shoulder right here. I can see these things and plan for them. There is still this impulsiveness creeping in, and I know I can do better. I know I can be better where these candles, it also comes from an understanding that chasing these big red candles, you have to really understand and you really have to trust with confidence. And that's something that just takes time for me, I suppose, is that chasing these big red candles should never be a reason to enter a trade. You should never enter a trade because you see the big red candle or the big green candle and you want to jump in. You should be jumping in the trade because you see the tapering, you see the liquidity, you see how the algos line up, you see the structure. I think that's how I have to be that's how I have to be approaching this. And I will moving forward. That will definitely be better. So I did prepare. So I had, left shoulder, head, right shoulder, forming on the break. And I took this right here, very beautiful. Saw the candle shooting down, engulfing this. Stopped, entered right here. Form that head. Targeting low of day. We broke. It is what it is. Yeah, bear flag here, right? There's the bear leg, the flag. On the short of the same price. Yeah. And I entered around the exact same price as my original trade. I would still been in trade. I had more profits here, but I got up. Yeah, and I kept on tightening it. Anyways, let's go over the best setups. So it was really a difficult day. You have this selling channel here, tapering orange, and there is this liquidity to grab above. We do form a micro double bottom here. There is strong volume coming in, defending, and you could long right there. I don't think it's a great trade. I think only until we break out, we retest it right here, and we form that left shoulder, head, left shoulder, right shoulder, left shoulder, and then we break out of this yellow taper channel. That's a better trade. And then we start rejecting this white channel. We break here, the orange taper channel, bear flag. Breakout of red, still holding the top of that channel here. Rejecting very hard this white selling channel, unable to break. And we form that head, left shoulder, right shoulder with the same exact orange controlled buying. Breaking us down here to break low of day. And we get a pretty explosive move. And the market continues again with that same controlled buying, right orange, same exact algorithm. Again, head, left shoulder, right shoulder, microstructure on the breakdown, and double bottoms with the low of day. And you get this very strong bullish strength here. Double bottom with these big bull bars coming in, breaking out of this green channel, strongly closing above it. And then you get that rally up. If I put this on a 5-minute chart, you should be able to see very clearly. Look at the volume on this bar defending here. Look at the volume on this big bull bar. Strong double bottom. And that's kind of an interesting PM session trade. Trying to grab all of this juicy liquidity up here that formed on this breakout, right?